Good day, ladies and gentlemen. It's Eric Coffin. I'm doing a very delayed myth backstage interview with Charles. That was all my fault, not his. And scheduling is just being a little bit of tricky, but we're together now, and we're going to talk about Heliostar. And maybe it's a blessing in disguise because you get some of the latest, you get some actually newer updates that you would have gotten had we done this 3 weeks ago. Heliostar trades on the venture HSTR, trades in the US HSTFX. Those of you that own it know what this company's about, but I kind of wanted to get it across to people who maybe don't own it yet. Would you primarily describe Heliostar as a growth story, Charles? Is that sort of in your mind the best presentation of it?
Yeah, I think so, and maybe one of the fastest growth stories to mid-tier status.
Yeah, you've done so many great deals. I mean, it's extremely impressive how you pulled this company together, and you got great projects cheap, and then the gold price was polite enough to be cooperative and go from 2 to 5,000. So you're looking pretty smart right now. I mean, you just announced a gold pour at your latest mine. Can you maybe expand on that a little bit and talk to us, if you can, about, I mean, I know there's an ongoing drill program to extend the mine life there, which, currently isn't that long, but it's a, extremely low CapEx heap leach setup. I mean, adding ounces pretty much goes right to the bottom line there, I would think.
Yeah, I think like St. Augustine, I think is going to be the unsung hero. I think I've said it before, but the way you raise it points to that, in the sense that as a company, we were 33,000 ounces last year. We're 50 to 55 guidance this year. By the end of 28, we think we'll be running at 150 to 200,000 ounce production profile. It's a lovely increase in production, and I believe a commensurate decrease in costs. But when we first bought the package of producing mines, St. Augustine, ironically, was the reason that a lot of people didn't do the deal. It looked like a war, you're walking into an immediate $20 million closure cost.
Right.
And so we had an advantage over others that we owed Argonaut $20 million in milestone payments for Anapola. So we swapped an immediate liability for a longer term liability, whereas other people saw a different risk profile.
Right.
Since then, we've made well over $20 million just out of the residual leaching that was underway there.
Right.
We needed a permit to restart St. Augustine, which we got in July. You just touched on, we restarted in December, and the way leach pads work, we got the gold starting to come out of that in mid to late January. At these gold prices, I think we'll make in the order of $75 million of profit out of St. Augustine this year alone. And then it's a 14-month mine life that ends in April next year. And so that, to most people is a high risk. And to us, it's $70 million of cash that we wouldn't have had otherwise. But where you were leading towards is, once we got that permit, that gave us the confidence to then start to do some drilling. So we're yet to put drilling results out from St. Augustine, although we've just added a second rig, which probably speaks to some of our enthusiasm.
Yeah.
We think there's a good chance that we can extend the mine life at St. Augustine. And if you can add another 12 months and add another 40, 50, $60 million of cash flow, what that means from our cash build ahead of Anapola is pretty incredible. So St. Augustine, it's probably going to remain the shortest mine life mine in our portfolio. But in most ways, it's an ATM that's accelerate growth of our ambitions to get bigger.
Yeah, it's crazy how you guys have built cash flow. I mean, it's really impressive. One thing I think is worth commenting on, I mean, I know, there was a fairly long period where Mexico, justifiably, I think, had a bit of a reputation for being pretty difficult and maybe it's more correct to say non-responsive when it came to permitting issues. It sounds to me like, from the outside looking in, it sounds like it's been relatively smooth sailing for you guys. Is that an overstatement, or?
Yeah, no, I think for us it's actually a fair statement. Mexico, the previous president was very anti-mining. Yeah. He made everyone, and we've talked in the past. It's one of the reasons we got these assets so cheaply. since then, the new president's been significantly more cooperative. I think we'd all like more permits more quickly. Yep. Everyone in business would like that from any government. This is still a left-leaning government in Mexico, but they, in our particular case, have permitted expansion of San Augustine in the pit, increase in the height of the leach pad. We've got a number of ancillary permits that we needed at Anapola. We've increased our leach pad capacity at La Colorada. We're going to restart the strip of Veta Madre on the back of a permit. So we've got a lot of those kind of small to medium permits that we needed to turn these assets around. And there's obviously been some higher profile permits with some new open pits and new underground. So I think we'd all like it to happen more quickly, right, but it's a night and day difference between the previous president and the new president in Mexico.
And how are things going at Anapola with the decline? Is that everything's kind of progressing pretty smoothly there?
Well, that's one of the powerful things of the cash flow. We've said that we expect to produce, around 150 million in cash flow from La Colorada and San Augustine to go towards the 300 million capex for Anapola. If gold prices stay at these levels, it gets easier and easier to do that. And if we can expand San Augustine, then potentially we can go materially further. But what it allows us to do is pull the trigger on big steps at Anapola ahead of time. Right. And so our intention this year is to push that decline down. We're going to start around the middle of the year. That'll get down to the bottom of the high-grade panel. Right. I'd always tied, there was two advantages of getting the decline. There's probably three advantages of pulling the decline down earlier. One's an accounting trick. It comes off the ultimate capex. Right. It's always a nice thing to do. The second one is the obvious de-risking. It gets you underneath your ore body so that you can do a lot more definition work for when you start mining. A lot of underground mines, the underground development is actually the rate limiting step, right, which won't be the case at Anapola. And then the last one, which is topical for this timing, is I'd always said we were going to wait till we got the decline down to drill deeper. Right. Mostly because the topography isn't super friendly. As you move north, you've got to go uphill and get longer and longer holes. We did kind of cheat on that with the drill program that we're doing at the moment. Right. We started pushing a few holes deeper. Okay. And we've just put out a very meaningful impact. The first deeper hole, so there's the high-grade panel, as you know, right, that's going to carry the bulk of the 9-10-year mine life. And then the resource was always open at depth with very little drilling. So we re-entered a hole and pushed it down and drilled just over 25 meters at over 8 grams in a 70, 80 meter step out from any other drilling in a resource. So it's a huge result.
It's very, very sweet. I mean, what's your sense? I mean, let's say the drill gods smile on you as they tend to do. I mean, that the drill gods seem to be pretty fond of you, Charles. So I'm going to assume that you don't piss them off. Assuming you can build this down, and I don't. I mean, in terms of the model, is there a fair amount of room? I mean, I don't know if it's strictly a, straight up pure epithermal system where there tends to be a, limiting factors in terms of the temperature of emplacement, in terms of how big your, how much dip your high grade.
Yeah, I'll jump in there because that's the cool thing about this. It's a skarn system. It does have the epithermal overprint that we were talking about offline, but it's a skarn system. And so the most powerful thing about trying to understand the potential is there's two other mines in the Guerrero Gold Belt, right, and they're cumulatively 15 and 20 million ounce deposits in mine history of resources and reserves. Right. They are also geologically deeper than we are. So we know that we're more shallow in the stratigraphy, and we are starting to see those changes in the ancillary minerals that tell us that you're getting down towards those levels. So theoretically, all of these should have a big hot intrusion, right, contact skarn on the outside. And then what's different about Anapola is some of that gold escaped up the column in to form the zone that we've been at. So we've always believed that there's potential for a lot more gold at depth. Right. There's been some lovely drill holes, 40 meters at 6 grams, 13 meters at 30 grams in that deeper drilling that gave us that encouragement to do it. And now we've drilled our first hole. We don't fully, if I'm honest, understand the controls at that depth. So in some ways, that's a bit more exciting that you can randomly put a hole down to test a step out, yep, and hit a result like that. Now we've got to do the work to understand, what's the best way to drill that lower zone. And so we've actually been pushing the rig down, drilling a lot more holes down deep since then. So we've got some more results coming that we're waiting impatiently for.
Right.
And we'll start to try and crack that geological code. But you've got tier one gold deposits in terms of size and especially in the case of Morelos and profitability. Immediately to the south of us. We always were holding our fire due to being undercapitalized in terms of what the ultimate potential of Anapola could be. Now we've got the case, we're spending $27 million this year across our company on exploration.
Right.
So now we've got no restrictions between the drilling we're doing now and getting that decline down in the second half of this year, early next year, means that we'll be able to find out ultimately how big Anapola could be.
And what's your, obviously you're working towards, updating, refining, finalizing economics and obviously, CapEx, long lead time, all that kind of stuff. Assuming you can add a bunch of ounces, and I think it's pretty much a done deal that you will. Is your preference to be more aggressive in terms of production size or to extend mine life? And would that impact the permitting? Like, would you have to kind of hold back and go, okay, fuck, are we doing 2,000 tons or 5,000 tons, or like what are we doing here?
No, I think we're committed on our path. We're going to deliver the feasibility study early next year. And so actually we are in a bit of a challenge in that we're right at our cutoff for that feasibility work, for all the subsequent metallurgical stope design that needs to be done. I don't think we'll necessarily, if we're able to find more here, it mightn't make that feasibility study. So the aim of the feasibility study is to support 10 years at 100,000 ounces. But what this might be able to show is, you might be able to add years beyond that mine life already in this. So that's pretty cool. So some of that drilling will make it. These results that we just put out will make the feasibility study. But I suspect on our timing, we want to get Anapola into production. We're not going to hold it back another 6-8 months for what would be year 10, 11, 12 in the mine life, given where it is. We've got $1,000 all-in sustaining cost in the PEA. And we want to print the cash that we know Anapola can as soon as possible.
And how practical, Heliostar is being, growth story, and the cash just keeps coming. How practical would it be for you? And I'm just pulling numbers out of my behind here, guys, so I don't read too much into them. But to grow, let's say grow production by, 20 or 30 or 40% and give you another step in that growth story. I realize it's easier said than done when it comes to underground operations, but you've got such beautiful geometry and thickness there. There's some limiting factors underground, but the other one obviously is the production plant. And how practical would it be to say, okay, let's strap on, a couple more ball mills or whatever we need to do and take this thing up another, take it from 100 to 120 or 130 or something like that.
I think there's two levers available to us. In the PEA, we've got a couple of years around 140,000 ounces, purely driven by higher grade. And so if we keep finding those kind of grades, we can get that 30-40% lift just from that. If there's more of that material, we could potentially rejig, mid-late mine life mine plans to keep going at that rate before you come back to the average mine life. The other one is, if we're so fortunate that we can find, multi-million ounces down deeper, then you would absolutely increase the scale of the operation and build a bigger mine there. So, we think we're designing a great mine for what the high-grade panel is now. I think those two, if we were so fortunate that this grew materially, you'd absolutely build a bigger mine and take advantage of it.
And right now, let's say for the sake of argument, gold stays at 5,000. You still think with some confidence that you'll be able to do most of this without a lot of equity dilution and possibly no equity dilution?
It's quite incredible that, and it's actually getting more and more. I'm getting more, there's more and more buffer in that statement as we're able to stack the cash on our balance sheet. So, we believe the study PEA came out in December. So it's a very current number that I'll be very disappointed if our team moves materially from when the FS comes out afterwards. So we're expecting a $300 million CapEx. We think that we'll have at least half of that in cash. Mate, we'll be spending some of that in early works and lead items, but effectively we can fund half of that with cash, and the remainder we expect to do with a project finance facility. So it does give us, a huge buffer. I don't think it's going to be very hard to raise that capital for a project like this. If gold stays at $5,000 an ounce, if Anapola was doing 100,000 ounces a year at $4,000 margin, it's an incredible project.
Yeah. I mean, and it is an incredible project. I think that covers my questions today. If you're serious about, owning, production level gold stocks, and or you want to start doing it because of the market that we're in, and I'm giving another talk in Toronto next weekend, and the title is going to be Life-Changing Gains, because the thing about this sector is, mining's hard. Charles makes it look really freaking easy, but it's not. It's tough. Finding deposits, growing deposits is not easy. And that's actually a good thing for right now, because when you're in a market like this where you've got so much excess demand for metals, the mining sector can't meet the growth rate that the investment market wants. So the only way you balance that book is prices go up and they stay up. So, I think we're probably I think this is probably to me, this is a secular, not a cyclical bull market for metals, especially precious metals. And in that kind of a market, if you can find a growth story like Heliostar, it's just simply a great place to be. And Charles and his team have just done such a phenomenal job. The way they've pulled in assets and grown production with very little dilution and potentially no future dilution. Honestly, folks, it doesn't get a hell of a lot better than that. So this is a story you really need to be on. Heliostar Metals, HSTR in the venture, HSTXF in the U.S. Charles Funk, CEO. Thanks for coming by, Charles. It's been a great story all along. It remains a great story. And congratulations, man. You've done a great job.
Yeah, we've got big goals. We've got a long way to go, but it's great to be at this point in the cycle. It de-risks our growth ambition significantly. Yeah. Thank you for the support you've given us from the beginning.
Great project. That was a real scoop getting your hands on that. And it's just such a great project.
Couldn't agree more.
That's it for me. I'll see you again soon, folks.